The next step on our project 2 is to take a look at how do we find financial information that you're going to need in order to do a good report. And you can kind of read there, it says you know how to find the stock quotes, and hopefully you've gotten your ticker symbol for your particular investment. So come down here and it says report the sales trend, and I ask for lots of information, and we'll go through that. But where do you find that? And last week I kind of struggled a little bit with the new website that Morningstar had, but let's go take a look at that again and see. So let's just go to Morningstar. There it is, and click on that and get that opened up, hopefully. We come up here, and so I was looking at Columbia Sportswear, and I'm going to use them. Hopefully nobody else has selected that, and if you haven't already, please don't. But anyhow, so I've looked up my ticker symbol, and I know that, yeah, granted it's showing up there, but still, if I were to enter in that ticker symbol, that's what would show up is my Columbia Sportswear. And so I could click on that, and the site was acting quite slow earlier, and so it probably still is. More as I just tried to scroll up and down on it, it seemed like it was moving a little bit slow. So hopefully we can make it kind of work here. Maybe it's just because there's so much stuff in it. So let's go to our first question and just see what happens there. Report the sales trend for the past 3 years. Calculate the annual growth. So let's just scroll down. Price versus fair value. I probably could have just clicked on one up above there. But anyhow, sales and revenue are synonymous. Okay, they basically mean the same thing. There can sometimes be subtle differences, but for our purposes, they're probably going to mean the same thing. And so I said, for the past 3 years, okay, well, what I want you to take a look at is this. This would be the end of 2014. So I got from the end of 2014 to the end of 2015 is 1. There's 2, right, to the end of 2016, and 3 to the end of 2017. So really it should be that my revenue in billions is what this is has gone from 2.1 billion to 2.47 billion, okay, over those 3 years. Now that gives you a 5-year growth rate. Well, that'd be nice, but I'm going to want you to calculate that 3-year growth rate. So what do we do? Well, let's do it like this. I'll just delete these. So, and this you've done on some of your assignments, so you should be able to do this, right? But you got 2.1 is your beginning number there. Okay, and 2.47 is your ending number. If I can get that over just far enough, is your ending number. So you put that in, okay, and then you come up and you hit that, and we're going to try to determine the rate. So I click OK. My number of periods, I'm going to put 3. I don't have a payment. I've got a present value, which I want to enter as a negative number, as we've learned in doing some of those things. And then my future value is that, and voila. There I go. So my 3-year growth rate has been 5.56%. And that's the sales trend. Earnings per share, basically it's going to be the same calculation. I have to find my earnings per share. It's actually this one right here. Okay, it's diluted earnings per share, and that's fine. You could use regular earnings per share. Then I'll explain them a little bit. Let me do that now, I guess, teaching moment. But diluted earnings per share takes into consideration stock options and those types of awards maybe that companies have given to employees that have yet to be exercised. Okay, oftentimes CEOs, CFOs, high-ranking officials will get stock options. That means they have an ability to purchase the stock at a given price at a future date. Okay, so they don't actually own the stock yet, but they're going to have the right to buy it. And so diluted earnings per share takes those shares into consideration, whereas regular earnings per share would not. Okay. In a lot of cases, it's pretty small, but some companies have awarded huge stock options and whatnot, where it can be very meaningful. Okay, and when you get into some more detailed financial statements, you'll kind of see those things. But in any event, so my earnings per share, much like that, is 194. It went down to 149. Boy, look at that. I'll tell you what, I'm looking at Columbia Sportswear here, and I've already got a basis for a good part of my paper. I got to figure out what happened that caused earnings to go from 272 down to 149 in that year, even though their revenue increased. Oh my goodness. And actually their operating income increased still. So something happened, something unusual happened. And often I'm going to talk about that sometimes as you go through this project. Boy, if you see something like that, that's going to be probably a big basis of your report, is telling me what happened there. Okay, and actually we'll see some numbers a little later, and I've got a reasonable guess as to what happened, but I have to do some reading to find out. So my 194, 149, you know what I actually did here? Because it'd be the same thing, the same beginning and end and same time frame. I could just copy this, I could paste that there, and boom, it calculates it for me. Okay, so you get that part done. Well, then it goes to report the most recent ROE and report the most recent ROA. And I think that those were still down here a little bit further, if I'm not mistaken. Yeah, there's ROA. I might have them the opposite. Okay, I wouldn't worry too much about this fourth quarter here. Your guys' might be kind of like this one. There could be some weird things that happened in the fourth quarter, but I'm more interested in the last year, or TTM means trailing 12 months, and oftentimes that's going to be the same right now because most of these companies probably have a calendar year end. Not necessarily the case. So you might see a difference between the year end 2017 and the trailing 12 months. Whichever one you report's fine. Okay, but label it that way. Okay, or at least label it if it's the TTM or trailing 12 months. So in my case, my return on equity 6.61 and my return on assets 4.97. Bingo, done with that question. Those two questions, that was pretty simple. What has been the gross profit trend for the last 5 years? Now this gets to be a little bit more difficult. So I'm going to come back up here, and I got, profits, net income would be my profit, and so I can go back 1, 2, 3, only 4 years, shoot. Well, let's click on this, and I want to do this anyhow because it gives me even more information. So I click on that, all financial, brings it up on a new tab, which is kind of nice. And look at that, isn't that beautiful? Man, I got all kinds of good stuff here. Okay, and my question was gross profit trend for the last 5 years. Well, let's see here. So I've got, gross profit. Wow, 741. Well, it's 1, 2, 3, 4 actually, but that's okay. It only goes back really 4 years in a sense. It's five years worth of data, but that's the end of the year, so it's 1, 2, 3, 4. Go ahead and use that. Okay, I'll be happy with that. So kind of like I did the other one, I've got 744 beginning and 1160 at the end. So I put those numbers in. I got to change, my calculation here then. So I can say my rate again. My number of periods is 4. My present value, let's use that as a negative, is that. Future value is that. And bing, bang. Walla walla bing bang, right? Got 1174 there. That's pretty darn good. That's a 12% annualized return almost on gross profit. I like that. Okay. And my operating expenses are right there, total operating expenses. So that was my next question, sorry. So we can plug that in, right? Okay. And calculate it. And again, I can just copy that because it's the same basic. It's 4 years, same basic data. And I get my answer. Cool. Okay, now I'm going to quickly, again, use a little teaching moment here, but remember I was saying that I need to find out kind of what happened. So look at that, their gross profit increased. Yeah, their operating expenses increased, but at a little lesser rate. Their operating income actually increased. Why did their earnings per share go way down? Okay, why? Well, I come down here, look at that, provisions for income tax. You know, kind of clicking along here, 50 or 40, you know, 57, 67, 50. Oh, wait a minute. It jumped up by like $100 million. What the heck is going on? Something happened, okay? And these are the things I kind of want you to look for and say, ooh, something happened. What is that? I need to go check on that, okay? And where I'm going to find that's probably going to be in the quarterly or annual report, and we'll take a look at each of those and, you know, what might be what. So remember I also talked about the earnings per share. You have the basic and then you have the diluted, okay? And you can see there is a couple cents difference, but just a few cents that has been going along. Take a look at this with your company. Now, there's no difference really here in this company in terms of their shares. A lot of these companies are aggressively buying back stock, and that could be a very meaningful thing and very important for your paper if the company you chose is aggressively buying back stock. And what you would see then is that the average shares have been decreasing. Okay. And you can see theirs have basically stayed the same. They probably got some rounding and stuff going on, but okay. So there you go. Has the company's long-term debt increased or decreased? So I want you to look that up as well. Well, to find debt, it's not on the income statement, right? But if we click on the balance sheet here, give it a second or two. Then comes up, there we go. So we've got current assets, total non-current assets, total current liabilities, total non-current liabilities, which would be long-term debt. Okay. Oops, clicked on the wrong thing there. So total non-current liabilities, that's what's happened. So again, we had a pretty big jump up here this last year, and that might have something to do with, you know, they took on some debt to, I didn't really talk about that, but the reason they probably had a big income tax thing at the end of the year, I'm guessing at this point, but I'd have to go find out, is because of the tax change. And so they may well have, because a lot of those tax benefits would actually be greater last year when the tax rate was higher than here in 2018 when the tax rate goes down. So they may have front-loaded some of those expenses and whatnot, or brought them into that year last year in order to take advantage of higher taxes, if that makes sense, but in order to take advantage of the deduction that they'd have gotten last year, okay, versus what they will get this year. So a bit of a guess, but I'd have to do some good reading to figure that out, and I'll try to show you where to do that reading. So, okay. But the long-term liabilities, there's, what was my question? Has the company's long-term debt, if any, increased or decreased over the last 5 years? You know, how I'd answer that question is saying, well, you know, it was clicking along, this slowly increasing until just this last year when it took a big jump up. You know, that's a 50% increase right there. Okay, and so that's how I would report that particular number, and you'll have to decide for your individual company. One thing I do want to point out too, I'm going to go back to the income statement because I think it's more pertinent there, but the view here is in dollars, and there's going to be a lot when you're reporting that you might come up and click on this and change it to the percent. Okay, and why is that? Well, you know, here's things that, and these seem minor, but look at their gross profits gone from 44% up to 47%. So they've had a 3 percentage point increase in their gross profit margins in the last 5 years. That's actually pretty impressive. You know, when you're selling a few $1 billion worth of stuff, a couple $1 billion worth of stuff anyhow, and you can increase your gross margin by 3%, that's meaningful. You know, that's some dollars in your shareholder's pocket. Right? Okay, and so that's pretty important, and you'll see it down here when you see the income before taxes. Okay, it's also gone up right at 3%. Okay, so they've done some really good jobs. Again, we had a tax thing that happened here that we need to figure out. and so we can report on that. But those are important things to really look at. That's going to be a lot of the basis, maybe, again, for the report that you're going to do for me. So pay attention to those as you go through them. So there we've answered, okay, those questions. Then I say examine the company's most recent annual report, because I want you to find the company's most recent annual reports. So how do you find that? Well, let's just go, I use Bing, but you guys probably use Google. And, I just start typing in Columbia Sportswear. I'm going to click on that. It brings that up, but then I'm going to go annual report. Columbia Sportswear's company annual reports. Let's click on that. Oh boy, that was tough. There it is, right? Okay, 2016 might be the most recent that we have at this point in time. Okay, might be the most recent that we have, or the best that we have at this time. I'm going to right click on that and open that in a new tab, and I'll show you why in a second. But it's going to bring up the annual report then that they had for 2016. There it is. Okay, let's go through and answer that question. But then I want to examine the company's most recent annual report. Tell me what it does in the words of management. It's okay to copy and paste much of this. Just make sure you cite your source, which should be the annual report. Okay, so let's go back to that annual report. Where am I going to find that? Well, the first few pages here are handy-dandy, glossy, pretty stuff that they're just putting in there for the benefit of their shareholders. Good stuff, don't get me wrong. It might be kind of fun to read for your company. Maybe you should. But basically the answer to your question, to my question, is going to be, we come down here and let's get to the, when you actually get to this part that looks like an official thing, because it is what they have to send to the Securities and Exchange Commission, the Form 10-K. Okay, when you actually get to here and you scroll down, you'll find the table of contents, and some are going to be a lot bigger, but usually it's going to be in the same order, right? So part 1, business. Oh, looky there. Let's just, and you can click on this, it'll take you there, but in this case it would have been the next page. Item 1, business, general. Founded in, Columbia Sportswear has grown to become a global leader in designing, sourcing, marketing, and distributing outdoor and active lifestyle. Boom. Let's see. Examine the company's most recent and tell me what it does in the words of management. It's okay to, I'm done, right? This is what they do. You could take a good part of that or most of it. You don't need to give me 3 pages worth, okay? This is what it does, right? Okay, it's probably in that first paragraph, and that's probably enough. And it probably will be for yours too. Maybe a longer or shorter paragraph. You might have to read through it a little bit and decide. But that's basically it. And I wanted you to do that because you're going to need these annual reports. And these come in PDFs, okay, often. And so you may want to take that PDF, if we can here, and save that, okay? So you could save that PDF and have it. You may want to go back and find those from even past ones, okay? It's too bad you can't. Those don't come in PDFs. You probably find it, but it might be a little more difficult. Now, I want you to look at this because I'm a little bit concerned about this last quarter, remember, or the last year, 2017, but their 2017 annual report's not out. You guys need to keep up on this because these annual reports will be coming out over the next few weeks, actually, maybe months. Some will come out at different times than others. But if I looked at these quarterly results, okay, for their fourth quarter, full year financial results, okay, that's their CFO commentary, and the Columbia Sportswear, I may want to just take a look at this, right? Because it may tell me then what happened there. And so I can click on this and get some more information, right? Here's record sales, loss per share, largely due to incremental income tax expense related to TCJA. I don't know what TCJA is, so I might have to even look that up. Okay. This gets to be a little bit more daunting to read through, but do it. I just kind of answered my question, right? They had record sales. Oh, there's tax cuts and Job Act. That's so. My guess was correct. Look at that. That they took a related income tax expense of $95.6 million, or $1.36. Okay, and again, I'm guessing. I have to guess here a little bit. If I read through this, I'll probably find it, but there's several pages I'd have to read through. I'm not going to bore you guys with that. But income tax expense related to that. And so I would bet that they front loaded, they brought forward some of those expenses so that they could deduct them this year where the tax rate was quite a bit higher. Okay, and if I read through that, when their annual report comes out, they'll probably tell me that as well. So it's kind of just a little interesting side note that we should pay attention to. It's not just a side note. That could be a basis of a lot of my report as I get into it. So, okay, so you might want to look at those quarterlies because they'll have the end of the year. They've done that quarterly statement, quarterly review at the end of the year because they have to turn that in earlier, but the annual report will come out a little bit later. And again, I might save this, right? I can sure save this one here to a thumb drive or my Z drive or something, so I have it. Okay, that should give you the basis for this next section, the finding financial information. I hope I've given you enough. There are other sites, and that's fine. You can use other sites. That Morningstar one, even though it's not as good as it used to be, I still kind of like that. It gives you that good information when you get into those financials. Ultimately, I want you reading these annual reports and taking a look at them, okay? And you'll find, when you go through them, okay, I'm going to get back down to that table of contents. Okay, because what you're going to find is that you're going to read, management's discussion and analysis of financial condition and results of operations. Dang, that kind of sounds a lot like what I'm going to be doing for my report. So you'll find that's fairly consistent. It's absolutely consistent among all these annual reports. Okay, and so while these things are 60 or 70 pages, I think you're going to find that a lot of this is going to condense down into this management discussion and then also actually looking at the numbers. So I better quit now. I'm getting a little long-winded. So thanks and good luck.